Good afternoon and welcome to BizTech's Asian Midday Market Watch. It's Tuesday and we have Jessica Amir, market strategist at Saxo Capital Markets, coming out of Sydney as our guest today. Jess, great to have you on the show.
Hello, great to see you, Brian.
Now, before I come back to you and get your insights, Jess, we're going to take a look at how crypto markets have been performing and also regional stock markets. We start with the SGX, which is down 0.12%. Bursa Malaysia is down 1.3%. Shanghai is down. Shanghai is up 0.26%. The ASX All Ordinaries is down 0.31%. The Nikkei is down 2.7%. The Hang Seng is down 1.73%. And rounding up the numbers, we've got the Kospi, which is down 2.15%. With the exception of Shanghai, Jess, it's a sea of red. Tell us why.
Yeah, spot on. The Aussie share market was slightly higher today, but absolutely, all in all, it is mostly a sea of red. I guess it's really worth noting today the areas where we are seeing the most selling, and that is the energy sector, Brian. And that's because the oil price rally has cooled. We have seen a cracking rally in the underlying spot oil price, which is up 18% in 11 days. And that's on the back of the OPEC production cuts, which will add to supply woes. But we did see the oil price take a bit of a breather today. So that's why we're seeing some red gains or some red moves in energy.
Now, Jess, I want to zoom in on your commentary. And one of the things you mentioned is a trilogy of market catalysts that are going to hit the markets this week. Tell us about them and why we shouldn't perhaps be too alarmed about it.
Yeah, great question. So we've got to remember that we've got a trifecta, a big, I guess, the triple whammy. So we've got US inflation, the federal FOMC meeting minutes, and then of course we've got US earnings season kicking off. This is all this week, so it's a trifecta of what could either be disappointment, but we think we'll likely see volatility pick up because each of these three things are a key catalyst for markets. So either way, markets are the S&P 500 and the NASDAQ are pretty much on a knife edge here. Add in the fact that we've got tension building up amid fresh attacks in Ukraine. So we are thinking that we might see the commando US dollar gain strength here, Brian. Also in equities, you might expect big swings, particularly with profit taking and selling coming into the mix again in the tech and growth side of the market. And you might see topping up in those defensive and staple names because we're probably going to get more proof in the pudding that inflation is here to stay and more rate hikes are ahead.
Now, speaking of inflation that's here to stay, there's a lot of action happening in commodities. What's your take on this right now, particularly in the agricultural sector?
So in the agricultural sector today, it's really worthwhile noting that we have seen the wheat price pop up to 3-month highs. And what actually happened overnight was the wheat price, the wheat futures price actually rose almost 8%. So it was just a whisker away from almost a limit up. So we haven't seen this in some time. So what actually triggered this was, of course, the fresh attack in Kiev. And now, of course, the market is really playing into, the market investors and traders are really playing into further supply being taken out of the market from wheat. We know that the Ukraine border, it's actually open at the minute, but the Ukraine border is potentially at risk of being cut off. If that does happen, you could potentially see wheat prices move higher. You've got to remember, Brian, wheat prices are already being supported higher here. That's because of the havoc that Hurricane Ian has caused on top of already restricted supply in South America as well.
And so now looking ahead, what are some key risks that you're seeing in the markets perhaps that we should be watching out for?
So I guess the trifecta of risks are, of course, the biggest of them all. So we've got US inflation data and the federal the FOMC meeting minutes also on the same day. So the risk is that more rate hikes are to come. So today we've seen a real indication that inflationary measures are picking up. And so the market is really not really quite factoring in this in. So we do think the market is primed for more failure and there's more risk for downside. So they're the economic standpoint key risks to be aware of. And then, of course, we have to remember US earnings season with the big banks unveiling results on Friday. Of course, if results do disappoint, if we see loan growth slow, if we see that their credit book is actually diminishing, there's a real risk that the financial sector will take another big haircut. And of course, the financial sector is a big part of the US economy and the broader economy. So that is probably putting markets, I guess, on notice here. So we're at a real touch and go point, very much a risk off and defensive tone, Brian.
Now, Jessica, as always, thank you very much for your insights and thanks for coming on the show.
Thank you so much. Take care.
Now, I'm Brian Fernandez, and we've been speaking to Jessica Amir, market strategist at Saxo Capital Markets, on BizTech's Asian Midday Market Watch. This video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. It will also be on our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.